Good morning to everyone. Welcoming everyone to the world of banking. So this video is again in the continuation with my two other previous videos in which we were exploring functional aspects related to the organization structure, the banking industry in India, the various types of banks, the various categories, the various development, specialized institutions, financial institutions that are included and that are not included in the banking, how they are different, and everything related to these type of concepts. So, in order to have a summary about the previous two videos, we have already seen different kinds, the structure of Indian banking system that is prevailing in India, the various type of scheduled commercial bank that includes the private sector banks, public sector banks, SBI and associates which are not now existing. Then we have seen the foreign banks and regional rural banks and their examples. So in this video particularly we are going to talk about the cooperative banks, or I should say the scheduled cooperative banks, and the other part which is left out, that is non-scheduled banks. So let us start with the fundamentals of cooperative banks, the conceptual background of the cooperative banks. These are also known as scheduled cooperative banks, right? They are registered under the Cooperative Societies Act and are regulated by RBI's Banking Regulation Act of 1949. Similarly like the commercial banks, but they were treated as the distinct entity. They're not being treated under or registered under the Cooperative Societies Act. They are registered under the Companies Act, whereas the cooperative banks are registered under the Cooperative Societies Act. But both of the commercial banks as well as the cooperative banks are being regulated by RBI's Banking Regulation Act of 1949. Now coming to the conceptual part, these are mostly credit-based institutions working in the rural and the urban areas. The concept says that they mostly cater to different types of businesses and conduct most of the secondary functions of scheduled commercial banks. So we have also seen in the previous videos about the functions of the commercial bank, that primary and secondary. So majority of the majority of the functions that are being performed and services and products that are being performed by cooperative banks mainly conduct most of the secondary functions of the scheduled commercial banks. So they have a unique ownership structure which is based on the cooperative system, where like-minded individuals, like-minded entities or companies representing a particular sector or a particular industry invest their money in a bank for providing credit to small, medium or large businesses. But if we talk about the commercial banks, they having different organizational structure based on the ownership structure, that is public, private and foreign, and other parts also like regional rural banks where state government, central government and the sponsored bank have their stakes or the shares invested in them. These banks supply credit to large number of industries or sectors specifically and especially designed for the rural areas such as farming, cattle rearing, milk production, personal finance, hatchery, etc. These are the various major areas where they are providing these kind of extensive support, right? They provide credit in urban areas to the businesses in various industries like distribution or marketing, housing, warehousing, textile, dairy, sugar, etc. And in addition, the functions of cooperative banks are mainly to cater to the needs of the rural areas and small borrowers, and they're concerned more with the financing of the agriculturalists. Though they also perform the main banking functions, their range is limited as compared to that of the commercial banks. So in order to say, cooperative banks are organized on a cooperative basis and are governed by their members according to the cooperative laws. They are also under the control of the state governments and to a lesser extent to the Reserve Bank. If one more point I would also like to add here, that certain provisions of the Banking Regulation Act, they also apply to the cooperative banks, but now some of the regulatory functions in respect of the cooperative banks have been assumed by NABARD, that is National Bank for Agricultural and rural development instead of the Reserve Bank of India. These banks are traditionally centered around the communities, localities, and workplace groups, and they are essentially linked to the small borrowers and small businesses generally. So, these banks provide most services such as savings and current accounts, safety deposit lockers or the locker facilities, loans and mortgages to private and businesses customers, mainly to the localized area, right? So, if we see the structure of the cooperative banking system, so in order to have a comparative view, we have seen the structure of the commercial banking, in which we have the public sector banks, private sector banks, regional rural banks, and then we have the foreign banks. But if we see, the cooperative banking structure is divided into following five main categories. If we go by the literature, that is primary urban cooperative banks, then we have the primary agricultural credit societies, then at district level, we have district central cooperative banks, and at the state level, we have state cooperative banks, and the last one is your land development banks. So, this is all about the structure of the cooperative banking. Now, these are few of the structural differences that we talked about, but now what we are going to do next is we are going to have a clear-cut demarcation and differences between commercial banking and the cooperative banking, or I should say the commercial banks and the cooperative banks. Talk about commercial banks are joint stock banks, right? Whereas cooperative banks on the other hand are cooperative organizations. So commercial banks are included under and forms like joint stock companies or joint stock banks, whereas cooperative banks are cooperative organizations. Next point talks about that commercial banks are governed by the Banking Regulation Act 1949, but cooperative banks are also governed by the Banking Regulation Act 1949, but to some extent, but they're majorly governed by Cooperative Societies Act of 1904. Commercial banks are subject to the control of the Reserve Bank of India directly, whereas cooperative banks are subject to the rules laid down by the registrar of cooperative societies. Cooperative banks laid down the foundation of the principle of cooperation, working for their interest of their members. So commercial banking in India are on the larger scale, whereas cooperative banks have lesser scope in offering a variety of banking services than the commercial banks. So the commercial banks, they have opted the system of branch banking so that they have countrywide operations. Branch banking means that they are having their headquarters at one place and they are operating in pan India or in the entire India with the help of large networks of branches, and this system is known as the concept of branch banking or the branch banking system adopted by the commercial bank. But if we try to see, many cooperative banks follow the unit banking, and unit banking system says that there is only one branch or one bank, this is just vice versa of the branch banking system. In branch banking we have number of branches, and in unit banking we have only one branch or one bank. Though there are cooperative banks with a number of branches, but their coverage is not countrywide, so they are not favorable, they are not having their geographical reach across the length and borders of the country. Commercial banks in India are of two types: public sector banks and private sector banks. Cooperative banks are private sector banks, but they are under the control of the state government. Commercial bank mostly provide short-term finance to industry, trade and commerce, including the various priority sector lendings like exports, like industries and agricultural too. But on the other hand, cooperative banks usually cater to the credit needs and credit requirements of the agriculturalist, and NABARD also plays an important role in taking care and looking after these cooperative banks. So mainly the agricultural farmers, small artisans, traders, they are the major customers or as far as cooperative banks are concerned. But commercial banks on the other hand, they also include the short-term and medium-term finance to the industry, trade and commerce, including the various priority sector lendings. And talks about that commercial banks offer a slightly lower rate of interest to their depositors than the cooperative banks, but cooperative banks offer a slightly higher rate of interest to their depositors than the commercial banks. So there is a point that commercial bank offers somewhere around 4%, that is somewhat lesser as compared to the interest rate given to its members or by the cooperative banks, because it mainly functions towards the benefit of their members. Like principle of cooperation is there, which is followed in the cooperative societies and cooperative banks. The borrowers of commercial banks are only account holders and have no voting power as such, no voting right as such. So they cannot have any influence on the lending policy of these banks. But in cooperative banks, borrowers are the member shareholders, so they have some influence on the lending policies of the banks on account of their voting power. Therefore, they are providing higher rate of return and higher interest to their members. But this is absent in case of the commercial banks. Commercial banks, on the other hand, are free from these kind of rigidities, whereas cooperative banks have not much scope of flexibility on account of the rigidities of the bylaws of the cooperative societies. So this is a bunch. In total, we have enumerated n number of differences between the commercial and the cooperative banks in order to have a exploratory form of understanding, exhaustive form of understanding about commercial bank and the cooperative banking structure that is prevailing in India. Now comes to the last portion, that is our non-scheduled banks. So non-scheduled banks are just a step ahead than the hierarchy that is being followed in the cooperative banks and the scheduled banks. So this is in parallel with the scheduled banks and non-scheduled banks. So scheduled banks include these two categories, the commercial banking and the cooperative banking. Non-scheduled banks are just vice versa of the scheduled banks, which talks about that non-scheduled banks are banks which are not included in the second schedule of RBI Act and have paid up capital and reserves less than 5 lakh rupees, right? So point number one is less than 5 lakh rupees. These banks are the opposite of the scheduled banks, earlier I discussed, and act like private limited companies with limited benefits or protection from RBI. They are not getting those privileges, the extra privileges like in extra services like commercial bank and scheduled banks are getting. These are absent in case of non-scheduled banks. These banks comprises of local area banks, LEBs in general language, that provide credit to the individuals or the businesses to a local area or to the businesses locally. For example, the coastal area bank or coastal bank, it is a private bank established under the Companies Act and approved by RBI as a local area bank, which is headquartered in Vijayawada, Andhra Pradesh. Now, by this video, we have concluded major aspects and the functional approaches towards the cooperative societies. We have seen the differences between the cooperative banks and commercial banking structure and understood the concept of non-scheduled banks, right? Thank you so much.